Okay, we're going to get started now, the time being 10:12. If that clock is right. Right. One, two. Okay, welcome everyone. My name is John Janigian. I'm the chair of Ways and Means, and looks like we've got a pretty good attendance. We might be missing a couple of people, but I think we should get started. So I want to first just welcome you to the Ways and Means Committee. Some of you obviously are returning members. Some of you are brand new. Some of you have been elected for the first time, and some of you are returning to the legislature. So probably the best thing to start off with is go around the room and have each person introduce themselves. And I guess mention if this is your first term or not. If not, what other committees have you been on? And how long you've been a state rep, if you've been here before, and then what's your background and your work background and so forth. So I'll let's see. Should I start off? I guess I'll start off, and then we'll go one way and then the other. As I said, my name is John Janigian. This is starting my fifth term in the House. I was on the Public Works and Highways Committee for the first 4 years, and I've been on Ways and Means since. I became chairman beginning of last year, and halfway through that term, and now starting this term, it'll be a complete term. And my background is for the first 25 years of my working life, I was started off as a computer programmer. I have a degree in computer science, master's degree in computer science, a bachelor's in chemistry. The chemistry part I've never really used. And I was in the computer field for 25 years. After that, I made a complete career change. I'm now a real estate broker, part-time, manage some properties, and also a state rep. So that's it. We'll move to the left here to the clerk.
Thank you, Mr. Chairman. I'm Bill Ohm. This is my fourth term in the legislature, all on Ways and Means. I took a 6-year sabbatical, and now I'm back in in office. My background is as a businessman. I ran a high-tech company of about 100 people. I have degrees in engineering and business, and I live in Nashua, New Hampshire for the last 20 years. I used to have an apple orchard out in Pelham, and that was a fun project for a while, but I'm happy to be back.
Thank you. Bill?
I'm Bill Bolton. This is my second term. Last one was, Ways and Means, and this one as well. And I'm a 30-year retired state employee working for public health generally. And then I became the state registrar and the director of the Division of Vital Records. And I then became implementation manager from some software that every state and territory needed for vital record sharing. So my focus was on public health, and now I'm an executive director of Transport Central. It's a small nonprofit, and we provide transportation to elderly and disabled up in the Plymouth area. And I'm also very active in our municipality. I've held 4 terms on the select board as chair and vice chair, and I'm finally stepping down from that. And that's pretty much it.
Thank you. Fred?
Good morning. Thank you, Mr. Chairman. I'm Fred Doucette. I'm starting my 6th term here in the House. Let's see, I started my career in the United States Navy. Subsequent to that, I spent 25 years as a firefighter paramedic in Salem. I'm since retired a long time ago, and I've spent the rest of my time being a public servant up here, and I very much look forward to this committee doing what it's done over many years, is working collaboratively. We've got a task ahead of us, and we need to work together to get things done, most specifically estimates as soon as we can screw them together. But I look forward to working with you all.
Thank you. Representative Ford?
Hello, thank you, Chairman. I'm Mary Ford. I'm a career educator. I've been a teacher, a state director of special ed, and for the last 30 years, I have been preparing teachers. And so I have developed programs, implemented programs, evaluated programs, all with an eye on creating high quality, credit efficient, affordable programs that make money. So I'm glad to be here and I look forward to working with the committee.
Thank you. Representative Tierney?
I'm Jim Tierney, COAS 1. This is my second term. I'm 15 and a half year veteran of the U.S. Air Force, retail, and then came FEMA for 10 years. And other than that, I've been retired. I'm on the Board of Selectmen, finishing up my 10th year on that in Northumberland, and I'm not running for that office again.
Okay. Representative Breyer?
Yeah, I'm Scott Breyer. I'm from Northwood, representing Rockingham District 1. I'm a freshman. This is my first term as a state rep. I have a bachelor's degree in accounting. I also have a MBA. I've worked 35 and a half years, retired from Department of Safety. In the capacity, I ran the Road Toll Bureau, which is basically the gas tax. I also did 13 years with the Office of Legislative Budget Assistant. I was, when I left there, I was an audit manager before I went over to safety. I was on the Board of Trustees for the International Fuel Tax Agreement for probably around 12 years. During that time, I was the president of that for 2 years for the U.S. and Canada provinces and states, and also was very active in the Federation of Tax Administrations with a concentration in fuel tax. And locally, I was a selectman for 21 years. I'm currently on the school board, and I'm also a police commissioner in the town of Northwood.
Thank you. All right. Representative Opal?
I'm Thomas Opal, representing Canaan, Dorchester, and Orange, Grafton 9. This is my first term as a state representative, but what feels like a million years ago in the late 70s and 80s, I was actually a reporter first for the National Telegraph and then for UPI covering this body, along with the other chamber. I have spent most of my career as a communications consultant, although Representative Doucette, I had the great privilege and honor of serving as Chief of Staff to the Secretary of the Navy for 8 years, and I have a son who's a second-class petty officer. So, go Navy, beat Army.
Thank you. Representative Murphy?
Thank you, Mr. Chairman. My name is Mary Murphy. I am the new state rep. This is my first term for Hillsborough 27, which is Deering and Francistown. Most recently, I have started up a software company with an emergency medicine physician for an AI-assisted search engine that's going to expose the self-pay cash price for every procedure that patients might need. Previous to that, I owned a very successful, I built the largest independent wealth management firm in the state and sold it 2 years ago to one of my employees. And then prior to that, I was a Fortune 500 senior executive for IBM, heading up their telco and internet service division. And so I'm on the broadband committee in Francistown for that reason. So that's the extent of my public service. Thank you.
Thank you. Representative Spar?
Thank you, Chairman.
And am I pronouncing that properly?
Yes, Spar, thank you. My background, I left school, I got into the insurance and investment sales world for about 7 years, and then I went into real estate brokerage. And I was in with the largest independent broker in the country for about 20 years and worked at some executive levels with them. I left the business about 7 years ago and produced and wrote a environmental documentary, which won a whole bunch of awards, was on PBS, and now I'm an executive director of an environmental nonprofit.
Thank you. Representative Ors?
Yeah, thank you, Mr. Chair. So I'm Representative Cyril Ors, my second term. First term was on Ways and Means. I joined the Army right out of high school, so I'm going to cut the Navy guys a break because my son was in the Navy. But our whole family has served. I am an accountant, an auditor, a controller, a VP of finance, own 2 businesses, photography studio, had a .com with Johnson & Johnson Healthcare years ago. And since I've retired, which has been a long time, from BAE, I worked as a part-time teacher, and I taught accounting at a community college. And now I have a real job here, so thank you very much.
Thank you, Representative Schamberg.
My name is Tom Schamberg. I represent Merrimack 6, the towns of Wilmot and Sutton. This is my 5th term here on Ways and Means, and I got here because of my 30 years of teaching K through 12 phys ed, health, and English, and I could roll out 10 balls and get 10 balls back. And that numbers, I'm high in numbers here. All right. I have served as 4 terms now as a selectman of the town of Wilmot, 3 terms on the municipal budget committee, and served as a mayor of my community in Ohio for 14 and a half years before I came to New Hampshire and got a law degree. And then for those of you that have a hard time pronouncing Chairman Janigian's name, mine is Schamberg, like a ham, an iceberg, and take a drink and you'll say it just right. Thank you.
Thank you, Representative Elberger.
Good morning to everyone. And if you're having trouble with Tom's name, Elberger, when I was a kid, the goof on it was hamburger, but I knew I became an adult when the goof on it was Limburger. So it's just Elberger as easily as you can spell it. I have an undergraduate degree in sociology with a minor in psych, master's in counseling and personnel services. I spent a fair amount of my career working in addiction treatment, including running drunk driving programs. Try that for fun if you want it sometime. I am a second-generation American. All 4 of my grandparents came to this country around 1900, fleeing anti-Semitism. In terms of government work, I spent 6 years on the school board in Lexington, Massachusetts, 12 years as an elected member of town meeting in Lexington, and then 6 more years an elected member of the Arlington town meeting. My husband and I run a weekly radio show in Nashua called Susan and Jim Talk Nashua. We were trying to come up with a clever title, and I guess we did. We have guests in talking about things ranging from politics to provenance of antique cars, which was a really fun show. And this is my 2nd term as a legislator and 2nd term on Ways and Means.
Thank you, Representative Malloy.
Thank you, Mr. Chairman. My name is Dennis Malloy. I live in Greenland, and I represent Greenland and Rye here in the State House. I have been on this committee now for 5 terms, and I've been in the House for 6 terms. My first term, I was serving in Barrington. We moved to Greenland. And on that, during that term, I was on municipal and county government. I have a master's degree in journalism and went into marketing right out of college. And I spent my career running a radio station and raising money for Iowa Public Television and New Hampshire Public Television. It's my background. Retired from that 10, 12 years ago, and then have been doing this ever since. I am trustee of trust funds in Greenland. I'm on a number of various boards and other commissions for New Hampshire. And I look forward to serving again. Thank you very much.
Thank you. Representative Almy.
Thank you. This is my 15th term. The first term was the first term that Ways and Means was folded into finance. And I wanted to be on finance, and I got told that I couldn't be because I was a freshman. So I went to election law because I thought I could do something about election law reform. And my second term, I got on finance, and I was part of the group that first put together the education funding solution. There were 10 of us trapped in a room for 6 weeks, 6.5 hours a day. I mean, 6.5 days a week. Sorry. I came from 25 years of overseas work in nonprofits. One of them, two of them, the International Agricultural Research Institutes. I got a PhD in order to be able to do what I wanted to do, which was work with small farmers and redo the Borlaug agricultural revolution to something that would work outside of flat fields. And I spent 6 years in Brazil, 5 years in Cameroon, 3 years in Madagascar. And at that point, I could not breathe anymore, the air in the cities of third world countries, and I had to retire. I'd developed a severe form of asthma. And I came home and was trying to figure out what to do when I was asked if I would run for state rep my first year in Lebanon. And it was nominal. I was supposed to lose. The Republicans had all of the seats in Lebanon. And I won. And then I went back to Madagascar to train somebody. But so I missed orientation. But I've been on Ways and Means itself since my third term. And we learned very quickly to collaborate in our committee once it was reformed, because we all have different skills and different experiences that help to understand what our economy is in this state and the influences that come on it from outside. And we need to share them. So I've been chair 4 times. The first time was 2 terms of the Great Recession. So I was one of the people that, with Governor Lynch, helped us through the Great Recession. And I'm here again.
Great, thank you. Representative Ullery.
My name's Jordan Ullery. This is only my 11th term. She's got me beat. And I've known her for almost as long. Yeah. I came over from criminal justice in my first year after the death of one of the members over there, which made an unbalanced committee, and have stayed here since. In addition, I've worked part-time on judiciary and a couple of small visits over to transportation. In the real world, I started off doing ambulance driver work, became one of the first nationally registered EMTs, and then became one of the first nationally registered paramedics. Helped usher that medical advance into the state of New Hampshire. The former chief of Concord and former director of emergency services was my classmate. After that, I became an insurance fraud investigator, and that was fun, particularly when I got a couple of attorneys disbarred for cheating. That was fun. You're collecting workers' comp. You go in for your medical examination. On the way out, you take your collar off, you take your walker off, and put it in the trunk, and give it to you, and give the collar to your attorney while you're opening the trunk. That kind of activities. something that when people say there isn't fraud in insurance, there is. It's there a lot. I've served on Ways and Means and helped to come up with some budgets, either with Norm Major or John Janagian or Susan Almy as chair. As this year is showing, normally we're within 95% of accuracy when we compile our estimated budgets. This year may be an outlier. There's going to be some hard decisions to make. We're going to have to take that into consideration. Thank you.
Thank you. And Representative Sodi.
Hi, my name is Julius Soti. This is my third term, second time on Ways and Means, first time I was on education. Let's see, my educational background is I have a degree in philosophy and history, and I've worked in construction. I was a probation officer for a while, and finally a real estate investor, and I own and manage my own real estate, and I'm ready to get busy here on Ways and Means.
Excellent. Thank you. Well, we've got sounds like we have a lot of great experience on this committee, and I welcome all of you, and I'm glad we're all going to be able to work together. Let's see. So what I want to do now is pretty much just talk about, and this will probably benefit the new members the most, how do things work and so forth. It'll be a review for those of you who have been here before, and I'm sure Susan and Jordan can jump in at times and give more feedback, both of them having many years on this committee. But basically, the main role of this committee is basically twofold: generating revenue estimates that finance will then use to determine how much can the state spend over the next biennium. And we will spend a good part of our next probably 5 to 6 weeks figuring out what do we think the revenues are going to be coming into the state over the next year and over the next actually 2 years. And there will be updates from time to time, but we've got to have our best guesstimate due by, I believe it's around February 15th. We may have I know finance, the chair of finance would like to know something sooner. Because they're the ones that figure out how to spend the money. We're the ones that say how much they have to spend. So it's an important job that obviously we need to take seriously and figure out. So what we'll be doing is we'll be hearing from committees next week we'll be meeting on the 13th and the 14th, primarily to hear from different state organizations like Department of Revenue and the different departments as to not necessarily what they're expecting for money yet, but so that people understand what is it they do. And for example, with DRA, they'll go over the myriad of taxes that they collect and what are they and when they're collected and so forth. Next time we have, to use DRA as an example, next time we have them back, it'll be to say, what does it look like? How have we been hitting expectations? Have we been missing expectations? If so, by how much? And what do you see happening in the coming year and biennium? The other important thing that we do, obviously, is look at the bills that come to our committee. And I looked last night. So far, we have 5 bills in the committee. I expect a lot more will come in. So any bills dealing with tax related issues like increase a tax, decrease a tax, remove a tax, fee related, anything that's affecting the money coming into the state is a bill that presumably would come here first. We will get a couple of second committee bills where it's been, the policy. I'll give you an example. One that obviously comes to mind is is marijuana bills. Policy-wise, they go to wherever they go to, probably Health and Human Services, I guess, or one of those committees first, and then If it passes out of that committee, it passes out of the House, it could come to us because maybe there's some sort of expenditure in it or tax or something. Or not expenditure, I should say tax or fee. Then it would come to our committee to discuss. We don't have that many second committee bills. Most of them will be first committee bills. Any questions? I don't want to go through this whole thing and not have if people have questions, feel free to raise your hand. I'll call on you. A lot of you, for the new people, I think you already have a sense of how it works, but if you have a question, you would raise your hand. Once I recognize you, you can speak. If you have a follow-up question, you would, I mean, this is a little less formal right now because it's kind of an orientation, but typically once we get into our regular meetings, if you have a follow-up question, you'd have to be recognized for the follow-up question as well. But anyways, any questions so far on what I've covered? Okay, good. Glad everything's crystal clear. But don't hesitate if you have any questions. So those are the main goals of this committee. For those of you who don't know, if you go onto the state website, I guess you can go on the state website and navigate yourself into the legislature, into the House, and specifically you can look at committees and then go to Ways and Means and see what bills we have coming up. So when we do work on bills, basically we will start with the first step will be to have, I'll schedule public hearings on bills, and at the public hearings we'll have, typically the public will come, and if somebody wants to speak, we have things called pink cards. There'll be pink cards that people fill out with their name and how long they're going to speak, whether they're for or against the bill, and then we'll hear from them. They'll typically sit in this seat directly in front of me, we, after they give their initial testimony, we as a committee can ask them questions, and obviously I'll recognize you. Raise your hand, I'll recognize you. You can ask a question. One thing that we don't do that I notice happens at the federal level is we don't put people on the hot seat and grill them and tell them how terrible they are, and the decorum in the House and in the House committees is to treat people with respect. If you totally disagree with the person, you don't express that. Our main thing is to understand why are they for or against the bill. So we're questioning them, we're hearing their answers. We can certainly ask a follow-up if we don't understand their answer, but we don't put them on the hot seat and tell them how they're wrong or in that regard. Typically, some bills they may just be introduced. There may be one speaker and they're done. Other bills that are more controversial, there may be situations where we have 15 people that want to speak, and typically, again, on the pink card, they have to put down how long they think they're going to speak. And I'll have those pink cards before I call on people. So I'll be able to say, okay, this person wants to speak for 2 minutes. Okay, they're 4 minutes in and it doesn't look like they're going to end. I'll most likely interrupt them and say, okay, you put 2 minutes. Can you please finish up? I guess the only other case would be people are sticking to their time frames, but then we have more people that want to speak. I might have to put a time limit on. I usually try not to do that because we want to hear what people have to say. If the person is repeating themselves or questions being asked seem like repetitive and we're getting the same answers, I may say, okay, I think, we have the answer to that, and so forth. Yes, Representative Orrs.
Thank you, Mr. Chair. So my question is, are we going to pre-stamp the pink cards with a 3-minute timestamp? That was a joke. Okay.
Well,
in other words,
it may be, that may have been a joke, but if, no, we don't pre-stamp anything. However, if there's tons and tons of pink cards, I may say, please limit. And then typically as we get, let's say it's one of those situations where there's a whole bunch of speakers and I getting, halfway through, 2/3 of the way through, and somebody's going to talk for 10 minutes, I may say, okay, could future speakers please avoid talking about the same things that have already been talked about? Please, add on to what you've had so that we keep people awake and get through it. So, Susan, did you have something you want to say?
Are you going to talk about when the lobbyists and the department people can speak?
Possibly, but thank you for bringing that up. I did write an outline for myself, but that's why it's very easy to miss something. Typically what we do is we have, I guess you can correct me if I'm wrong, but typically if I have state senators and state reps here, we typically, after the bill is introduced, we'll typically hear from state senators first because they typically have many things going on. Also try to hear from state reps who are on other committees because they're probably here. I'm trying to get back to their committee, so we'll hear from them. Then we'll hear from the public. Did you have anything to, is that?
And the departments and the lobby.
The departments would probably be, the departments would be last. Is that what you were thinking?
Unless the department knows a lot more about the bill than
Right.
anybody else there.
Sure. Yeah. If it's something where the department is, I know that, or people have questions, we want to get the department into answering that before we have people going on so that we can build on those answers. Okay. Yes, Representative Ullery.
So there's essentially no set time frame or structure for the questionings other than that normally the senators are first, followed by the lobbyists and public. Is that
Well,
correct?
reps,
And
state
then,
reps.
state reps, yeah.
Yeah.
Wow, we're insignificant. The other question is, you've got a blue sheet down at the end and pink cards, and if anyone asks you if they have to talk, no, they can sign the blue sheet, and it's just pro or con on the bill with no place for except for this. There's just either pro or con on that. You can also go online, and if anyone asks for the freshmen, there's a place online where you can make some comments that eventually gets into the record. It gets into the record, not necessarily read into the committee meeting. And depending upon what we do tomorrow, that may change too. There may be some changes. There may not be. Probably won't be. But
The public, you're thinking public hearing.
yeah, I'm thinking public hearing, Bill 44. But that, that's whatever.
Yeah, I mean, currently, for those of you who aren't up on this, every bill has a public hearing, no matter whether we think it's a crazy bill or not, or every bill gets a public hearing. Representative Ullery is referring to a rule change that we'll be voting on tomorrow that basically says that if, I may not have this complete, but basically, I think a committee can would have the ability not to hold a public hearing if, is it 3/4? 3/4 of the committee say, okay, we don't hear. So, I mean, we'll see what happens with that. But that's the only caveat to what we're saying about public hearings. Yes.
One other thing for the new members, these little thingies that we have in front of us, if you haven't used them before, it's press to talk and press to listen, because there's a speaker in here as well as a microphone. You should have heard the difference in voice here. So if the red light's on, you're talking. The red light's off, you're listening.
Oh, I see.
And keep the microphone close to your face, not down at the edge of the thing. But because they're directional mics, so you want to talk into the microphone if you want to be heard. And this committee meeting, and matter of fact, all of them now, aren't they?
Being recorded?
Are being recorded.
Yeah, I don't
So
know. I
you're on
assume this
video
one-
right now.
Quite possibly. You should always assume the mic is open.
No, you're only supposed to say that to our caucus.
Okay. Any questions? Okay. So those are the public hearings. I will open, yeah, I don't have my gavels over there, but typically I'll have a gavel. I will hit the gavel, open the public hearing. When it's over, I'll close the public hearing. The only other time I guess I would use a gavel in between that would be if we needed to recess for some reason, or if something was out of control, which I haven't seen happen in a long time. So hopefully we can continue that way. Okay, so bills go through basically three segments. First, the public hearing, we just talked about that. Next is the work session. Although it doesn't have to go through a work session, technically it could go right to an executive session. Typically, I try to put every bill through a work session, unless it's a very simple bill. We're kind of all on board. Both parties are pretty much all on board on what it is. We may go directly to an exec session and vote on it. But first, let me cover work sessions. So work sessions basically are an opportunity to talk about the bill. Okay. By now we've gone through the public hearings. We've got information. We discuss it amongst ourselves, and somebody may bring an amendment to the bill, saying, I brought an amendment. Here's what I think, and we can discuss that. Once I feel like, okay, we've pretty much exhausted that discussion, we'll end the work session on that bill. And we can either go on to another work session on another bill, or we could go on to an executive session on that bill. Typically, if the bill was somewhat complicated, or there's follow-up needed, or somebody's going to get an amendment or something, typically, obviously, we would not do an exec session. We would not vote on it. I'd say, okay, we'll push this off for a couple of weeks or a week while we gather information, and we'll have an exec session on it at that time. And then lastly is a bill then can go through an exec session, where typically somebody will make a motion. They make a motion to ITL the bill, let's say, which would be inexpedient to legislate, which is basically saying we as a committee are going to recommend to the full House that they kill this bill if it goes ITL. Once it has a second, then we discuss it. Once discussion is done, I can call for a vote. And go from there. The clerk would call the roll. The roll starts with the vice chair is called first to answer how they would vote. Since the Republicans have a majority, the Republicans would then we'll go through the list. Each would vote. Then we go to the ranking Democrat start first. Yeah, so the ranking Democrat would start first, and then we go down the line of Democrats, and then the chair, who's me, obviously, would vote last. Let's see. So it could be ITL, inexpedient to legislate. It could be that OTP, ought to pass, is the terminology we use if we want to pass a bill. We could... I guess if we defer a bill, we don't vote on deferring. We just make. Yeah, or you right. You could have an ought to pass with an amendment, in which case you need to pass the amendment first, or you need to vote, not pass. You need to vote on the amendment first, and then we'd vote on the underlying bill. Sometimes there's more than one amendment, and we'd have to handle each amendment first, and then the bill. Jordan or anyone else have anything to add to that, or any questions? Yes, Representative Ohm.
Yeah, as the clerk, I believe the chairman votes last.
Yes.
Thank you.
Anyone have any questions? And you'll get to know, those of you who are new those of you who have been on other committees, I think the process should be pretty similar. And those of you who are new will get it pretty quickly, I think, as to what happens. It's not a complicated process. It's more just understanding how it goes together. Okay, what else do we have here? All right, I don't have it. Yes.
No,
Um,
everyone knows who she is.
yes, that might not be a bad idea. Yes, I'd like to introduce our researcher, Jennifer Four. She's sitting in the corner over there with a laptop. She's a researcher. She's invaluable to us on a lot of, well, not a lot, on bills. And also sometimes there's just questions on maybe something, have we voted on this before? Historical, just information about background. Did you want to add anything, Jennifer? Or?
Like Representative Jimmy said, the history of a certain issue. I've been with the Ways and Means Committee for 8 years now, but I'm still learning a ton every year. So don't hesitate to ask if you have small questions, if you have bigger projects that you'd like to have me work on, those will be coordinated through Chair Janakian. I work also this year. I'll be in the Education Policy and Administration Committee, and the Education Funding Committee, as well as Legislative Administration. So that's sort of my portfolio for this session. I've worked with some of you on other committees in the past. So again, don't hesitate to ask me anything. If I can't help because it's a part of the thing, I'll let you know. If it's a personal research request, I will refer you to OLS. And if I don't know the answer, I'll tell you that I don't know, but I'll try to find out. So I look forward to another session.
Thank you. Yes.
Also, Karen,
Yes.
if she's in back there.
Yeah, maybe we should have, yeah, you want to get her? Okay, thank you. Karen Karwacki is the administrative. And here she is. This is Karen Karwacki. And she she is another invaluable resource. She helps out tremendously. And you're also helping, what, 3 or 4 other committees, I believe? 4 other committees. Okay.
It will be the next time. And the 10 cards stay here. So if you cannot take them, that would be great. Yeah, you may take them right into O2 while running around.
Excellent. Thank you, Karen. We kind of went through this quicker than I thought, but I'll just talk about our next meetings. And at 11:30, I have food being delivered, and so our agenda for today is 11:30, roughly 11:30. Lunch will be served, depending on when they arrive, and then at 1 o'clock, we're going to hear from the New Hampshire Society of Certified Public Accountants. We obviously do a lot with taxes in this committee, and so hearing from them is a valuable resource. That's slated for about an hour, so we should be done by 2 o'clock for those of you trying to plan your afternoon. So we will. I'm going to talk about the next 2 meetings briefly, and so as you probably know, and I assume those of you who are new, you know that you can see the calendars online to know what's coming up and so forth. So we have meetings scheduled now on the 13th and 14th, Monday and Tuesday of next week. Both of those start at 9 o'clock, which is an earlier start than I normally start. Most of the time, most of our meetings will start at 10 o'clock. And the reason I'm starting at 9 is because we have a lot to get through, and I want to finish by 3:30 time frame, and not because people who are on boards in their hometowns, whether it's selectmen or planning board or whatever it is. Typically we try to, keep that in mind. As well as just other things that need to be done in your personal life. So we will start at 9 o'clock both those days. And as I said, most times it'll be 10 o'clock, but it'll be noticed in the calendar. Just for planning purposes, I believe, I don't have it scheduled yet, but most likely we'll meet the following week. Okay, we already know about Monday the 13th, Tuesday the 14th. The following week, the 20th, is Martin Luther King Day. We will not meet on that day. Typically, this committee will meet on Mondays and Tuesdays in general. We share this room. For those of you who are new, before COVID, that's you see the sliding, or I should call it accordion door, used to be closed all the time, and each committee would be, like Ways and Means would be just on this side, and criminal justice would be on the other side, for example. But since COVID and we opened up the room to create more space, we've kept it that way ever since. So we share this double room with criminal justice. And I've talked to Representative Terry Roy. We're going to continue what we did last year, which was Ways and Means will take Mondays and Tuesdays. Criminal justice will take Wednesday, Thursdays, and Fridays. But we'll share Wednesdays from time to time. So the week of the 20th is one of those times. I've already talked to him and communicated with him. So plan on Tuesday the 21st and Wednesday the 22nd that we'll have meetings. And I'm not sure what, those meetings will be yet, because it could be a mix of hearing from agencies, because as I said, one of our jobs is to do revenue estimates. And I may start a couple of public hearings on the bills that we have. So which day I'm going to do that and so forth, I don't know, but I would say we need both of those days. I'll probably the start time on those probably will be 10 o'clock, unless there's some issue with somebody presenting a bill. But I typically try to stay away from 9 o'clock. The earliest it would probably be is 9:30, but you'll see the times come out of the calendar. Or I may even know by let's say the 13th or 14th when we meet, and I can announce it then as well. But definitely reserve the 21st and the 22nd as well. So, yes, Representative Almy.
Yeah, I'd like to tell my caucus that we are going to have to, we are not finishing until 2. Most of us are going to take an hour to get back home. And we have a caucus, a general caucus, starting at 3. So we, Today.
Okay, that's right.
So we can't meet informally to talk about what we've just been listening to and other questions until I am not sure when. This week is pretty messy unless we got together somehow on Friday. We're going to have to wait until next week and stay after the meetings on Monday or Tuesday. We can discuss it online, but I presume the Republicans also will be integrating in a informal caucus also at some point.
TBD. Yeah. Okay. I think that's all I really have right now. Does anyone have any questions? Yes.
Thank you, Mr. Chair. So you said we want to have our results ready for the finance committees by February 15th?
By February 15th.
Okay.
Now, I know that I'm going to get pushed to give some preliminaries sooner, but we won't publicize anything until that time frame.
Okay. I just wanted to check because it's a Saturday, so I just thought I mean, technically, we're probably going to.
Yeah, I'm
push
not
that
sure how that
back,
works.
right?
That's February 15th is the date the governor's supposed to have their budget out as well. Uh, and it won't be a Saturday, right? So we say on or about the 15th. Okay. So that's all
I would just suggest that you resist every effort to get it out earlier than when the governor's budget is coming. Because that's when they
Well,
really need
Yeah,
it.
we want to make sure that we, as a committee, pretty much agree on where that number should be. And we've done fairly well in the past, and that's because we've taken our time to listen to the agencies, talk about it, figure it out. There's macroeconomic issues, countrywide, worldwide. There's also state of New Hampshire issues, and we've got to integrate all those and come up with what we think the revenues are going to look like. Yes.
We'll also find that we get a set of preliminary numbers, and then as we get closer to tax day in April, the numbers become more firm because there's some preliminary payments that have been made on some of the business taxes and such. You will receive a copy of Focus, which gives some explanation as to where and why the numbers are that they say that they are, where they are. I wouldn't pay too much attention to being a bracketed, meaning negative number right now, because you got money coming in later, and the fiscal year and calendar year oftentimes get confused. So keep that kind of straight in your head.
Yes, Representative Almy.
Yeah, I think it would be useful to take the committee through, or at least the new people through, the revenue focus and what it does. It comes out every month, up to 3 days after the working days after the month is over, depending on how complicated it was. And it includes a description of what that tax was doing in comparison to the prior year, and in comparison to and what it's been doing over the entire year up to that date. And the year starts in July. And it also includes things like, well, the insurance money was just late. It's coming in right away. So don't worry about that part of it. So this kind of thing, it'd be good, I think, to have an introduction for at least. the
Yeah.
new people.
So just as a, it's being passed around now, just to kind of so you kind of see what it looks like.
This is on the internet. You go to administrative services, financial side. I forget, maybe you've got the exact name of it down, but at Department of Administrative Services, the financial part. And then you look for reports and you get your choice of this and a number of other reports that are in there, including the dedicated funds.
You all should have it in your email as well, unless you deleted it. We got it a few days ago, and the title on the email, I don't have it in front of me, but it's Revenue Focus, December Revenue Focus, and that's what it is. Okay. Yeah. Well, we'll get one, yeah, as you said, each month, and it is an indicator of how things are tracking. Is there anything else that those of you who have been here before that you think we're missing in this initial talk, or are there any questions? If there's nothing else, then as I said, the time frame is around 11:30. I'm having food delivered, so if you want to take a break and do whatever. Yes, Susan.
After we finish eating,
Put your mic on.
After we finish eating, we've got about an hour.
So after I mean, you were just trying to figure out when to have your caucus. There may be time after lunch, because if the lunch comes around 11:30, quarter at 12, we are not doing anything till 1 o'clock. At 1 o'clock, the Society of CPAs will be here. So you'll also have time. So you'll have time between now and 11:30 and time between eating and 1 o'clock.
Okay. But we're eating together.
We're eating in here, yes. The whole idea being that get to know each other, yeah. So anyways, we'll just we'll end it there for now, and we'll see when hopefully lunch will be here around 11:30, 11:40. Thank you. If members would take their seats, we'll get started shortly.
I joined.
All right, the time being 1:05, we will get started with our committee presentation. Today we're going to hear from the New Hampshire Society of CPAs, and we'll start with Robin Houston.
Good afternoon, Mr. Chairman, members of the committee. My name is Robin Houston, and I'm the CEO of the New Hampshire Society of CPAs. I would like to thank all of you for allowing us to come and give a brief overview of the accounting profession in our state, offered by some of the most educated and successful practitioners that are members of the society. As a brief overview, we are a statewide nonprofit organization that works to develop and maintain high professional standards and offers a wide array of legislative, technical support, and networking opportunities to its members. I'm sure you can all appreciate we're doing a great deal of work with Pipeline, high school kids, and college kids to get them interested in coming into this profession because we need more accountants. So if any of you have any interest in coming back to the accounting world, please take note. Advocacy, educational partnerships, and professional development are what we strive to provide, and being here today aligns perfectly with our goal of helping to understand the complexities with this field, which it has many. We also are very proud of our business partnerships and collaborations, including that of the New Hampshire Bankers, the New Hampshire Bar, the Department of Revenue Administration, and more. We have fostered these relationships and have a wonderful working partnership with all of them, including quarterly meetings with Commissioner Stepp and her team. Today, you will hear from 3 of our esteemed members. Joel Ulbricht, CPA, partner K2N CPAs in Windham, New Hampshire. He was also a council member at the AICPA and a former board member and president of the New Hampshire Society of CPAs. Kevin Kennedy, CPA, CFE, ABV, principal of Maloney and Kennedy, and he is also on our board of directors for the New Hampshire Society of CPAs as our tax and legislative committee chair. And also, last but not least, Corey Reynolds. He's a CPA, MST, and very recently honored as a principal at Baker Newman Noyes. On your agenda is my contact information, as well as Teresa Rosenberger's, who is our legislative advocate and helped us schedule today's presentation. Please feel free to reach out to me directly if I can help with any follow-up. And I told Jennifer I would follow over the direct materials after the presentation today. Thank you.
Great, thank you. So it looks like first up we have Joel Albrecht talking about interest and dividends.
Good afternoon, Chairman and members. We're glad to be here. It's always exciting to come talk about tax, right?
That's what we do.
Tax and revenues, that's what it's all about, right? And I feel like what we've done in the state has been good partners with the DRA in helping develop good tax administration in the state. And I'm proud of all the meetings and all the things we've done with the state and our history. I just wanted to have a quick introduction on interest and dividends. I guess the introduction is last week there was a funeral for it, right? I hear. So it's dead. So I guess there's not a whole lot to talk about. But I would note this, and I guess you all may know enough about it. We all knew it as a 5% tax on interest and dividends, and then it just kept getting more complex and more difficult, and things to administer became harder and harder, like the transferable interest rules that came about where certain dividends from certain LLCs were also taxable. And then we had a lot of 754 transactions where companies were liquidating and interest and dividends got interesting for those. So I sit back here and look at it and I'm going like, I'm even glad that thing's gone, because it just got to be more and more difficult every year we went out. Back in 2014, I was actually appointed by, this is why I probably know some of you, by Governor Lynch at the time to head a commission on the study of business taxes. And I look at the document quite a few years ago, right? 10 years ago. And if you look through it, there are things we thought would make better tax administration and good things to do. And I look at the list and it's amazing how many of those have been looked at, how many have been changed. And our recommendation, even for interest and dividends tax, was to make it simple. Just follow what a taxpayer would have on their Schedule B for interest and dividends and call it a day. Put whatever rate you want it, but make it much more simpler to administer. So I guess I sit back and look at, if that thing ever comes back, let's call it something different. Let's make it easy. And it would certainly make a lot more sense. You know, we live in a state where people don't even think there's an income tax. So as CPAs, we sit back and someone comes in and we tell them they're going to be taxed on their interest and dividends. And they go, but I moved here because there's no income tax. So that's the first thing you have to get over usually with that tax. The second thing, and I guess my thought at this point in time is, I used to always think of interest and dividends as being a even 60 million, 70 million, maybe revenue. I think we all know last year was like 185, but that was a really interesting year. All of our clients showed up with these gigantic interest and dividends receipts from banks, from CDs, from their investment companies, and it was a one-off. Most of my clients already, I'll tell you, they're 70, 75% of what they had for income the year before. So it's not like you can say we're losing 185 this year. Maybe it's down to 150, 140. So it was going to go down anyway. So is that enough to say about interest and dividends? We had the funeral. Now we can move on.
Do we have any questions?
Any questions?
Question,
Yes.
Mr. Chairman.
Representative Shambo.
Do you think changing the word from interest and dividends tax to distributions would simplify the message that this is only under distributions back to you? Just something to think about, Mr. Albright. Thank you.
You bet. Thank you. I hate the word distributions even more, but I know in talking with Lindsay Stepp, she said, if it ever comes back, we're going to call it something totally different. So let's keep all those thoughts going on what we're going to call it next time around. Thank you.
Well, nothing else? Okay, thank you.
Am I staying up
And
here for BET?
actually, you are staying up there, yeah, BET.
All right, let's talk about BET a little bit. BET, you'll hear about in the context of how it works with BPT. So we all know BET is business enterprise tax, which is a special tax on special items that a business has. And we'll get a little bit more definition on what business profits are and how it gets taxed. But the two of them certainly work together. And in 1993, I was 6 years a New Hampshire resident, and that's when all that came about. So it was interesting to find out about BET. And there were some thoughts about making business taxes in New Hampshire a fairer tax. Because at the time, most big companies, public companies, they had to leave net income behind. There was some tax they were going to pay because they had to pay on the profits they had to keep. And we as service people or other companies didn't have to pay any because all we did was we took all the money out. So we had nothing left behind that we needed to leave to capitalize our companies with. So it kind of became a business profits tax on big people. Everybody else paid nothing. So I understand that it came about, it kind of made it a little more fair. And in that twist was something called the deemed compensation deduction. So for people who were smaller, they could zero out their business profits tax if they can control it and pay zero tax. And that's where the unfairness came about. BET came along and said, look, we're going to tax you on 3 components at a different rate. So if you're a business, you're going to measure your compensation deductions, whether deemed or actual. We're going to add in your interest expense, and we're going to add in dividends that were paid out, and we're going to add those 3, and we're going to tax it at a fairly low rate. Today, that rate's now 0.55 of 1%. So it's not a big tax, but yet it kind of evens out. You know, businesses have good years and bad years, and wages are a little bit more stable. So it's been a good stabilization for business tax in New Hampshire. That's what my brain always says. Stan Arnold always used to tell me that. So those 3 components were important to figure out your BET. The threshold for that BET tax has continued to go up. It's now at $281,000. So it's a great tax in that it exempts real small businesses who shouldn't have to be paying a tax. That's the positive about where we're at right now. The good part about the business enterprise tax is it's a credit against your business profits tax. So companies don't end up paying both. They end up figuring out their business profits tax, their BET, and in the end of the day, they're going to pay the highest of the 2. But it's a formula based on, here's your business profits tax, take a credit for your BET, and that's what you have for a liability. Let's see, what else do we want to talk about? There's been a couple other states that played around with an enterprise tax. I think most of them are gone. New Hampshire's probably the only one now with a business enterprise tax. It makes New Hampshire a little bit unique and problematic all at the same time because you've got a tax law that really no other state plays with. So it's more interesting for new companies coming in to learn about BET. But as I said, I think it's been good in a way of keeping state revenues pretty consistent within business cycles that go up and down. There are other credits to BET. There's the research and development tax credit, which can be taken against BET. The New Hampshire Children's Scholarship Fund. There's credits for funding CTE centers at high schools, I think mostly. There's the new family medical leave credits. There's the insurance tax credit, which an insurance company can take against their BET. And CDFA credits and a bunch of others. So there's things companies can do to invest right to lower their BET tax. So just a real quick, and I might just make this really, really quick. Let's say a business has $500,000 of revenues. Well, first of all, we know they're going to be subject to BET, but if their business profits is $100,000, they would otherwise have a BPT tax to pay. If that company is a single owner and he's left with that $100,000 of comp left over, he's going to pay $550 to have that $100,000 compensation under BET. Assuming his BPT is probably nothing, he's paying $550 for BET. So it's not a bad tax, and that's just kind of the way the formulas work for most small companies. And I think that's probably about all I really need to add about BET. Unless there's any questions, I'd love to answer them.
Thank you. I see a couple. Representative Almy.
Yes. It seems to me that since the the companies that do have to pay the BPT pay the BET first. When we look at business profits tax, what we're looking at is just the excess above the BET. And so it kind of warps how we're looking at things.
So that's how your revenue reports come out from DRA, is BET, and then all the additional stuff is BPT?
Yeah.
And I think
hadn't
most
known
companies would look at BET as their sort of minimum tax, right? They're never gonna pay any less than that.
Thank you.
Yes, Representative Schamberg.
Mr. Albright, what would happen if there was just not two taxes, but just one tax, the BET tax, to do away with the BPT? You just had BET. Do you see a difference in the amount of revenue the state would be getting, or be?
Well, I think it would be, right? Because I think BPT is pretty well loaded up by large companies that work in New Hampshire. So the interesting question would be, maybe to DRA one of these days, is what BET tax rate would it take to have the same revenues we're having from both taxes right now? I suspect that's going to be a pretty high tax rate if it's 0.55% right now.
Representative Almy.
Thank you. If we had just a BET, there are quite a few businesses with very few employees in this state that have very large revenue, and they would go scot-free, correct? Or almost.
You think they'd pay about the same?
I would think they'd pay less.
I would think so, because BET is kind of a minimum amount.
Mm-hmm.
And so you'd lose a lot of BPT. I don't think that would be good for state revenues.
Yeah. Thanks.
Representative Ullery.
Thank you, Mr. Chair. Thank you for taking my question. When you're dealing with a new company moving into New Hampshire in a new environment, say someone who's used to New York or Massachusetts or places where we're aggressively recruiting right now, when they see this BET, BPT thing, what is their reaction?
Interesting. You know, a lot of them come in because they think a lot of costs are going to be different, and they're thinking their business tax will go down. And I think that's probably true. The business profits tax rate right now is lower than more states than it was years ago. That was part of our commission report. So I think the rate's gone the right direction. I think the only thing that most people don't like about BET is that if they're a startup and they know they've got 4 years of losing money, they're paying a tax. Whereas if they just stayed in New York and continued to have business losses, they wouldn't pay anything. So the BET is probably the thing that's hardest for companies to get over. But then you just talk to them about the rate. I mean, a rate of less than 1% isn't going to be a lot of money to fuss about. And that's what I try to get those clients to focus on.
Thank you for taking my question.
Representative Orrs.
Thank you, Mr. Chair. So thank you for taking my question. I was encouraged by the fact that you found the tax code complicated. Having done taxes in the past and being a former accountant, and Robin, I'm not interested. Is there a way to simplify some of the tax codes in your mind? Like, let's just say the I&D tax didn't go away. How might you consider simplifying it? And and the question's been asked, really. I was going to ask the similar questions. How do we simplify what we have now between BET and BPT? Thank you.
Yeah, and if you can go to the libraries and find our 2014 commission report, you'd probably find it pretty interesting, because it's still pretty accurate today. I think interest and dividends needed, and this is in the report, it needed to be focused just on those two items and not a world of other stuff. and create an exemption that's high enough that gets rid of most of the small payers. And I also think on business profits and business enterprise taxes, those thresholds have been going up. So they've been sort of helping to keep small businesses from having to do those reports. And I think those are two of the greatest things that's happened over the years with our business taxes. I think all businesses expect to pay when they come to New Hampshire, and I don't hear a lot of companies complaining. You know, the rates are lower. I think the more that we could sync our tax code with the IRS code would be something that would be always worth studying, because that certainly helps it make it that much more simpler.
Yes, Representative Almy.
I was struck a couple of years ago when the man who was head of the BIA was still head. I think it was his last hurrah. He, because we were still sort of in the pandemic, he put together a remote BIA presentation, and he personally arranged a interview of 3 heads of business, one of them fairly small, one of them fairly large, one's the beer one in the middle, sort of, I think. And after he'd asked them a number of leading questions, they didn't say anything about taxes. And so he finally asked them on, what's your opinion of our taxes? And 2 of them said that, I don't know, said, we don't know anything about our taxes. The accountant gives it to us and we sign it. And the 3rd one didn't say anything. So is this normal?
Yeah, I think so. Because like I said a minute ago, it's the expectation you're going to pay something. And I think most people understand New Hampshire's just unique, right? We're going to have our own solutions. We're going to figure out our own way. And I think most people just understand that when they come, that they're going to pay less and it's going to be different.
Okay.
Good.
Thank you, Joel.
You bet. Save some questions for Corey.
And up next is Corey Reynolds.
Hello, everybody. Thank you for having me here today, along with the rest of the group. So my task is to talk about the New Hampshire Business Profits Tax and somehow squeeze all of that into 10 minutes. So we're going to do what we can. We'll touch it all at a high level. And of course, any follow-up questions, we're happy to take them. So the New Hampshire Business Profits Tax is the other half of what Joel was talking about. So our 2-part tax system for businesses, the business enterprise tax, the business profits tax. They work hand in hand. As Joel mentioned, you get that credit for those business enterprise taxes paid against the business profits tax. And the business profits tax is really a more traditional income tax. So we're looking at a 7.5% rate on the net business, on the net profits of the business. So really what I'm going to walk through today is how do we actually calculate what those net profits for that business are? So we really just start off with, well, what's federal taxable income? Whether that could be the federal taxable income as a C corporation, S corporation, partnership, or a sole proprietorship being picked up on their personal income tax return as Schedule C, Schedule E. And then just due to differences between New Hampshire tax law and federal tax law, there's a series of adjustments that end up being made to arrive at the amount of income that will be subject to that 7.5% tax. So first, what I wanted to touch on, and Joel had talked about this briefly as well, is that New Hampshire compensation deduction, which really applies to non-corporate entities. So the LLCs, taxes, partnerships, general partnerships, sole proprietorships, all of those types of businesses. And what this deduction is, I mean, I hate to call it a phantom deduction, but whether it's amounts paid out of the business or deemed amounts to be paid out of the business, it's in recognition of the services provided by the members of that organization. So when you look at a C Corp or S Corporation, they're allowed to take deductions for wages paid to their service providing members. So, you know, the owner of a C Corp does a bunch of work for that C Corp. They receive a W-2 for their efforts. Well, that's deductible in arriving at federal income and at New Hampshire taxable income. The sole proprietor partnership doesn't have that same write-off, so this is an equalizer in effect. I think what really starts to become the fuzzy math when it comes to New Hampshire is like, well, what is that compensation deduction? Is in the end that when you review the rules, it discusses that it's a reasonable payment for the services provided by the member. Well, what's reasonable? When we look, it points to federal rules related to reasonable compensation for C corporations, which is extremely broad. So in that regard, many companies can be very aggressive with those compensation deductions within the letter of the law. So those taxpayers, they need to be able to justify that through their own record keeping, so that on an annual basis they should, in coordination with their tax preparer, usually determine, right, well, what is that reasonable compensation number? Let's document how we arrived at that number. Maybe it's based on the hours worked, maybe it's based on the types of services provided, whatever it might be, and then take that deduction on the return. The flip side is the option to take a safe harbor compensation deduction, which right now under New Hampshire statute is $75,000 for an entity. So if you can take that deduction up to $75,000, you don't have to have any record keeping as to how much you took for that compensation deduction. And say a little bit of legislative history there it was the last session. There was proposals, and there's been proposals in the past as well, to raise that safe harbor. So that $75,000 was set well over a decade ago now, with no index for inflation. So it's just been, as we know, there's certainly been an inflationary environment the last few years. I believe that proposal last time around was to bring that safe harbor deduction. It was around $110,000. I don't recall the exact amount. But then even further, index it for inflation so they don't run into that same issue on a go-forward basis. So looking beyond that compensation deduction, we're looking at other adjustments to arriving from federal income down to what's taxable for New Hampshire business profits. So one of the primary ones that almost all businesses see is adjustments for depreciation items. And that comes down to, well, New Hampshire says, well, you cannot take bonus depreciation like you can federally. And we have a different number, maximum amount that you can expense under Section 179 than you can for federal purposes. So New Hampshire says, all right, well, you took all those deductions for federal purposes. Well, you need to add those back for state of New Hampshire purposes. But then you still get to depreciate those items over their useful life. So say something has a useful life of 5 years, and when maybe federally someone was able to write it off all in year one, and New Hampshire gets written off over 5 years. So by the time you get to the end of the life of that asset, you've taken the same deduction for both federal and New Hampshire purposes. Exactly. Yeah. And that's a very common difference too. And you look at across the country, it is very common that states will have completely different rules as it goes to bonus depreciation or Section 179. So that's a very normal thing that New Hampshire has. Another common one that I end up seeing with my client base is separate entity deduction, which just goes into some of how New Hampshire addresses taxation. And that is looking at each LLC, each entity as a separate entity for New Hampshire state tax purposes. This actually is a divergence from how it might be dealt with at the federal level, where, the comedy in my world, great majority of my clients are in the real estate space. So if you have someone who has a holding company and then they have 20 LLCs wholly owned by that holding company. So for federally, they just have a single tax return. For state of New Hampshire purposes, potentially they have 21 separate New Hampshire tax returns that they need to file. But also that separate entity deduction applies to if you have flow through, say that you have an investment and a partnership that throws off a K1. Well, that partnership might already be subject to New Hampshire taxation. So your next step level, you shouldn't be subject to it again. So again, you get to back that out, a separate entity. So each entity is dealt with in its own silo for New Hampshire tax purposes. There's combined filing requirements, which can be triggered, which I think Kevin's going to talk about at least briefly. But for someone who's operating wholly within the state of New Hampshire, that's a general environment that they're working in. There's a number of other smaller adjustments that we see, not quite as commonly, but it depends on the activity of the taxpayer, like interest income from U.S. obligations, bonds, treasury. Interest and dividend income that was, subject to the I&D tax. So that'll be something that's going away. And then adjustments related to federal basis adjustments. So, one person buys another person's partnership interest to buy into a partnership. Well, federally, there's a step up in the basis of the assets for that purchase, and they get to depreciate that step up. New Hampshire has different rules surrounding that, so we won't get into those complexities, but typically there ends up being a difference where oftentimes that step up is not taken for New Hampshire tax purposes, and they don't get that similar depreciation write-off. Going a little bit further down, and next item on your bullet point list, there's the net operating loss deduction. So this is in recognition. It's like, all right, well, sometimes it doesn't go so well. The business loses money. And what New Hampshire allows is that those losses can be carried forward up to 10 years and offset business profits in future years. Any annual loss is limited to 10 million. So say someone has a loss of 12, well, they can only carry forward 10. And I think the NOL is also something that kind of highlights a legislative success over the last few years. And what used to be the case for the NOL is it was subject to double apportionment. And this really just impacted those taxpayers who were doing business inside and outside of New Hampshire. So they had to divide up their income based on an apportionment formula to determine how much of that income is subject to tax in the state. So the way that the rules worked before, the year that you incurred that loss, you apportioned it based on the current year percentage. And then in the year that you utilize that loss to offset income, it effectively ended up being apportioned a second time. So in that world, like say you had a taxpayer who had $1 million loss in year one and $1 million of income year two, and let's say 50% of their business occurred in the state in both years. So under the old rules, once you end up going through all of it, I'll save you walking through all the math, but that taxpayer between year one and year two ends up subject to tax on $250,000 to the New Hampshire business profits tax. Well, that's the income subject to the tax. That's kind of counterintuitive when you say, wait, I lost $1 million, I made $1 million, shouldn't I be at break even? Well, that's not how the old rules worked, but that's how they work on a go forward basis. So that was a good win. So then once we get through all of that, all right, we've made our adjustments, we've taken out our net operating losses, and then we assess the tax at 7.5%. And we aren't quite done yet because we get to apply all of our credits. So Joel mentioned a number of these already. The R&D tax credit is a pretty common one, depending on the business clients are in, which is really based on a portion of the federal R&D credit expenses that a taxpayer takes. Education tax credits, career and technical training tax credits, CDFA. A lot of these credits are based on qualified contributions to specific programs, whether it's a designated program by the CDFA, Community Development Finance Administration, or specifically by the state, a chosen project. There's a few others out there that I don't deal with quite as often in my world of real estate, but the Coas County credits, paid family and medical leave, ERZ, insurance premiums, and then, as Joel mentioned, those business enterprise tax credits, which is just a dollar for dollar credit for anything you had paid in business enterprise taxes. And just to further a little bit of what Joel said, when you pay those business enterprise taxes and say in a year you didn't have any business profits tax, you're operating at a loss, or your business profits tax was small enough that your enterprise tax was actually larger, those excess business enterprise tax credits that you weren't able to use against your BBT carry forward for up to 10 years. So you have opportunity to use them in a more profitable year. So that's all I have on business profits tax, a whirlwind through it. So I'd stop here and see what questions we may have.
Do we have any questions? Yes, Representative Orrs.
Thank you, Mr. Chair, and thank you for taking my question. So you're going through the different taxes that we pay based on this and that and tax exemption. So my first thought is, how do we simplify all that? And what might be the cost savings to the businesses and the state of New Hampshire if we were to simplify that tax code? And to piggyback off of that, a big issue that we're hearing, of course, is property taxes. So years ago, when I lived in Pennsylvania, the overall state flat tax, and they did have other taxes, was 3.2%. So is there a way, if you were to put your mind together with Joel and who do we have here, Kevin and Robin, and so how do you simplify the tax code? We come up with one simple flat tax, covers the property tax, covers the school issues, yada, yada, yada. What's the answer in your vision to how do we do that?
Again, very accounting-like answer. It depends.
That's a lawyer's answer.
There's a lot of, there'd be a lot of ways to go about it depending on where you want that tax base to come from. And when I look at the business tax side, and that's where most of my client base is, I'd say when we look at the relative complexity of New Hampshire taxes compared to the size of the state, it's completely out of balance.
Very complex.
Yeah, exactly. It's when we have groups that are, like large real estate investment groups that perhaps are working with a big four firm, they're actually consulting with local firms here in New Hampshire because they don't understand what's going on with the tax code and they're trying to understand those ramifications. As far as making it simpler, it really, the closer you end up mirroring the federal side, the simpler it gets in my mind, because then there's less of these adjustments that need to be made on an annual basis. And in some ways, you're not able to mirror it the same way with maintaining the same tax structure we have. Like you talk about partnerships. Well, at the federal level, the income of the partnership flows through to the individuals and they pay the tax. Well, unless we're proposing a personal income tax in New Hampshire, that's not going to be the case. So you're still going to be looking with how you address those adjustments at the business level and across multiple businesses owned by the same group of owners. So it's a very complex, you still end up in a complex result to get a simpler answer, if that makes sense. But yeah, the closer you end up mirroring federal, especially a lot of these adjustments that are made related to transactions or depreciation, a lot of those smaller items, if someone can just look at, well, here's my federal taxable income, that's what I'm also dealing with the state of New Hampshire, well, inherently that's simpler. Of course, it's a matter of policy as far as, well, how do you want to get there?
All right. Follow up. Thank you, Mr. Chair. So, God forbid we put the CPAs out of business or the lawyers, which we know is never going to happen. But if, in your opinion, if we could simplify the tax code, what would you anticipate a flat tax being in the state of New Hampshire?
I definitely wouldn't be the one qualified to answer that question based on the state budgets. I admit that's not something I'm monitoring, so I couldn't give you what that number might be.
Okay, very good. Thank you.
Yep.
Representative Ullery.
Thank you, Mr. Chair. Following up on Representative Orrs and your last point of discussion here regarding and other credits.
Yep.
If you combine all the credits, and this is a speculation question. I'm looking for the general overall rate. You said 7.5% is the base rate we start from. What would be the median or average? I know they're two different things, but somewhere in there, rate most businesses who pay a tax pay.
It's really going to depend on the composition of the bit. I know, terrible answer. Because when we look at call it like a service organization that they end up paying entirely the business enterprise tax, they have an entirely different world than a corporate manufacturer that ends up paying pretty close to that pure 7.5% rate.
Follow up? Would there be any methodology which your association could come up with that would generate some idea about the differences between, say, a manufacturing light industrial versus service, and the comparative rates to make sure that the code is equitable to both entities?
Yeah, I mean, based on the data that the New Hampshire DRA collects and they have available to them through the federal tax returns, I'm pretty sure that they would be able to pull together something along those lines. But that'd be a great question for Lindsay too.
All right, thank you. Another follow-up, please. Follow-up. Yeah, you mentioned that the safe harbor is currently at 75K.
Correct.
I recall some discussion of increasing that to 100. I don't remember 110, and I don't remember a COLA adjustment on that. If that were to take place, that sounds like reasonable, but how would it operate with the COLA? Would it be an automatic based upon the federal law, or would we take an action each year to do it? I know that if it's a rolling thing, then we're not meeting our constitutional obligation to the way it sets, according to some people. Some people say that it does, but how would that work, if you can?
Yeah, and from what I recall from their proposal, yeah, I couldn't I think it was 100. I feel like I heard some discussion of a little bit higher at some point, but I think the proposal was actually 100. But the proposal included a every other year adjustment for cost of living increase, and I don't recall right now what that was tied to directly. You know, what metric they were utilizing.
Thank you.
Representative Elmy.
Thank you. Ways and Means produced that safe harbor bill, and we defended it against Republican opposition and got it through, and then were killed in the election because they used it against us, and then you adopted it. But and you put it up to 75, which is what we wanted, except that Governor Lynch was afraid of going that high. So it stayed at 75. I don't know if it stayed long enough to get to 100%. Have you looked at that? I mean, to 100K?
Yeah, currently it is just at $75,000.
If you put the CPI, which is what we also remember used for the
BPT.
BET and the BPT, then I don't know if it's CPI urban New England.
Yeah,
that we've been using.
Just off the cuff, my estimation from 75,000 that was set over a decade ago to today, just looking at the last few years, I think you'd certainly be well in excess of 100,000. You'd have to run the numbers for to be sure, but
so we'd be losing a fair amount of revenue.
Yeah, if it was, I'd say
Not that high.
If the compensation deduction was increased, that safe harbor, it could potentially lead to less revenue in that now taxpayers are able to utilize that safe harbor to have less subject to business profits tax at 7.5% and move it over to the BET bucket at currently 0.55%.
Thanks.
Does that end up being a no questions asked deduction? Or is it, I know you don't have to have paperwork, but is it, can DRA look at it and say, well, this business, that's too high for this, or is it no questions asked?
No, they can't.
Across the board.
There is a very difficult history behind making it no questions asked. Let's just
Yeah,
Is that the way
at
you
one
guys see
point
it?
in time, there was a number of DRA audits surrounding reasonable compensation. That has not been the case for some time in my experience.
Okay, great. Thank you. Seeing no other questions, thank you very much.
Thank you.
And let's see, it looks like we now have Kevin Kennedy up.
Good afternoon, Mr. Chairman, members of the commission. I will add to my resume that Robin gave that some time ago I participated in a legislative committee on Water's Edge versus worldwide reporting. A couple of folks who are here on this committee now that we served together on that. So far we've been discussing New Hampshire taxation. I'm going to take it a little bit further in some of the other complex areas as it relates to when you have a business entity that has activity in more than one state. And so the considerations that these entities have to take on is where might they have a filing requirement in what states? And if they do, once they figure out they have to file in more than one state, how do they split up the pie? How do they take that net income and piece it to the various states in order to determine what their taxable income is and their taxes are in those states? Further than that, if you have entities that have some commonality, common control, common operations and relationships, is there a requirement that these entities have to combine their reporting into one reporting to the state of New Hampshire or other states? And then lastly, I'm going to touch base on if you have a New Hampshire entity or taxpayer that may have an interest in a foreign entity, and how does that activity get reported in New Hampshire? So relative to the first item as to whether or not there's a filing requirement, and many of you we have sat through this presentation before, and so hopefully this is just a refresher, but one of the magic words that we use is nexus. And nexus, kind of loosely defined, is the requisite contact between a taxpayer and a state before the state has jurisdiction to tax the taxpayer. Meaning, does the taxpayer have some presence within a state that the state laws and the federal laws potentially mean that they're now subject to the taxation rules and laws of that particular state? Now, when there's a physical presence for a company, they have employees in a state, they have property in a state, they have an office, that will almost automatically create nexus to make them subject to the taxation laws and regs of that particular state. But a lot of states have nexus definitions that go beyond just a physical presence. And we often refer to these as economic nexus. Excuse me, I'm going to check my clock because I tend to ramble. I love to hear the sound of my own voice. New Hampshire has a definition under RSA 77A, and I won't read all of it, but it refers to a business activity. A business activity means a substantial economic presence evidenced by a purposeful direction of business toward the state, et cetera, et cetera. And so in New Hampshire, it's not just physical nexus, but potentially an economic nexus could create. Now, one hurdle that states have to face with economic nexus is Public Law 86-272, which has been around a long time. And that essentially limits the ability for a state to impose taxation if the only activity a company has in a state is the solicitation of orders. But that has come through a lot of challenges over the last few years. You may be familiar with South Dakota versus Wayfarer, in which there was a decision by the courts that for sales and use tax, they don't need physical presence, they just need economic presence. And every state comes up with their own definition of economic presence. And so now states outside of New Hampshire, because we don't have a sales tax, can require companies that do business out of the state to collect and remit sales tax to those states, even though they physically don't go into the state and they only have maybe a connection in terms of using third-party freight shifters to move their product there. Also, more recently, the public law 86272 in terms of this limitation has been challenged in terms of that it's only tangible property that is subject to this law, not services and intangible properties. So services like that of an attorney or CPA that may extend into another state may be subject to these economic nexus. And so that's the first thing a company has to do is, do I have nexus, whether it's physical or economic, that may make me subject to the taxation laws of another state. So once they make that decision that they have a filing requirement, the next thing is how do we split up the pie? And that's where this next term, apportionment, which has already been used here, comes into play. And apportionment roughly is essentially the formula that the states develop to determine how you allocate your net profit to the various states that you're taxable in. Historically, there used to be three things that states used to look at, including New Hampshire: sales, property, and wages. A couple of years ago, New Hampshire moved to just looking at sales, that we refer to it as the single sales factor. So New Hampshire, when looking at apportionment formula, only looks at sales. A lot of other states have moved over to sales as well. But even though that has been simplified to only include sales, there's still a lot of ambiguity or complications that come with just looking at sales apportionment. And part of that is really because it's hard to, because some states, including New Hampshire recently, have moved to market-based sourcing. So historically, we used to use, and some states still use, cost of performance. I'm a CPA. I do a tax return for a client who lives in Massachusetts, but all my employees are here. So under cost of performance, that sale was generated here in New Hampshire because that's where the cost of that performance was incurred. Under the market-based approach, because the client is in Massachusetts and they receive the benefit of my service in Massachusetts, that sale is now apportioned to Massachusetts for purposes of determining how we allocate it for the two tax returns that I file in New Hampshire and Massachusetts. So that's market-based sourcing. And again, a couple of years ago, New Hampshire moved to market-based sourcing. It gets very complex for a number of reasons. You take a software company that develops software in one state, but they put it on a server in another state for a client that has places all over the U.S. that access it or maybe download it. And how do you determine what the state is? And so there's a lot of complexity that comes with market-based sourcing. So now we've moved from nexus, and now we've determined how do we split the pie, the apportionment. And then we go into the question is, what if you have a lot of businesses that have common relationships, and there are reasons in which they've kind of segregated these operations into separate companies? Well, this is where we get into the concept of unitary filing. Unitary filing, the definition is located also under RSA 77A. It says unitary business means one or more related business organizations engaged in business activity both within and without the state, among which there exists unity of ownership, operation, use, and interdependence in their functions. So if there's some ownership or commonality or use between these entities, they may be determined that, hey, you got to take these separate entities and you have to combine them in order to report. So you would put these entities together into one profit and loss and balance sheet. You might take out intercompany activity, and then you'd apportion it again based on the apportionment rules, and you come up with one return for one or several entities to report in New Hampshire. Under Revenue Ruling Section 301, they get into the more detail, the definition of unity of operation, use, etc. So we now have a situation where we have this complexity of multiple states and potentially consolidating entities together. And some states have unitary requirements that have different definitions than what New Hampshire has, and some doesn't. And so as a practitioner, I may find that I have to fill a unitary return for New Hampshire, but file several returns for my clients in different states that are individually done. So that is the concept of unitary filing. And the last item is relative to when we have foreign activity. And as I'd mentioned, I was on that commission about worldwide reporting and Water's Edge. So when we talk about apportionment, New Hampshire uses what's known as a water's edge. And essentially the water's edge means you go up to the coast and you're done. You don't include any other entities in your unitary filing that are outside of the United States. Historically, New Hampshire would only tax the income on foreign entities when the money came into the state. So you have an entity in New Hampshire, they own a company in Germany. Germany issues a distribution, it comes back to the U.S., and then New Hampshire would tax it at that particular point. A couple of budget sessions ago, in the Tax Cut and Jobs Act, which was a major overhaul of the federal system back in 2017, came up with a new tax for foreign companies. It's called the GILTI tax, Global Intangible Low Tax Income. And essentially this federal government is now looking at foreign entities that are controlled foreign corporations and including that income onto the federal return. There's a credit for foreign taxes, but and a couple of budget sessions ago, it was decided that 50% of this global intangible low tax income would find its way onto the business profits tax return. And so there is some inclusion of global intangible low tax income on the New Hampshire business profits tax return. So even though we are still at water's edge, meaning we're not incorporating all of those foreign entities onto the New Hampshire return, there is recognition of foreign income to a degree on the New Hampshire return. So I think that's about my 10 minutes. And I know that's a lot. And if your head didn't hurt a little bit after I'm done, then I didn't do my job right. So
Thank you. Representative Schoenberg.
Thank you, Mr. Chairman, and thank you for taking my question. Is there a possibility of reduction of net profits to be taxed by the state of New Hampshire if you use only single sales or if you only use market-based sourcing?
I don't have the data to understand. I think the DRA would have a better sense of that. Yeah.
I just thought maybe you would.
Representative Boards.
Thank you, Mr. Chair, and thank you for taking my question. So back in the COVID, when people were working in New Hampshire but still had to pay a mass tax, they weren't computing the mass. How does that play into your nexus and your, can you give us how that played out?
Sure. So relative to what I was referring to, which has to do with the business activity, it didn't play into it quite as much, and I can expand on that if need be. But I think what you're referring to is individuals who were employees of companies in Massachusetts, and they weren't in Massachusetts working, but Massachusetts was still taxing it. Yeah. So, and by the way, I think that Mass pulled that off, but that's a significant issue in terms of other states too. New York is very aggressive that if you work for a New York company, even though you never step into the state, they're still taxing you as a New York employee. And so essentially the states basically, especially when COVID hits, passed these laws that said, look, we know that the rules used to be if you weren't in the state, it wasn't considered mass wages. But of course, when COVID hit, they said, no, we can't just suddenly lose all this revenue because everybody's working at home. I'm not sure I've seen too much. There's been a lot of discussion and debate, and I'm not sure what court cases have come up on this, but it seems to me that the states have largely won on their arguments that if you're working for a company in their state and there's some sort of connection enough within that state that you're in it, or that you don't have an exemption, that those taxes are subject to income taxes personally for those states. So probably not a great answer to your question, but.
No, pretty much. So was New Hampshire follow up? Thank you. So was New Hampshire able to maybe buffer that a little bit, or?
I don't think so. I know there were some efforts, I think, by the state a couple of years ago when that happened to kind of repudiate that, and I don't think it ever got it. My recollection is it didn't get anywhere.
Representative Elmy.
Yes, could I ask, in a case like that, if someone is living in Connecticut and working in New York City remotely only, would he end up paying income tax in both states?
Potentially.
On the same thing.
So on the assumption he would be subject to New York taxes. Now, New York does have exemptions for things like if your employer requires it, and if you're kind of the office for that employer in that state. If you're subject to it, then every state is a little different relative to how they don't double tax you. So, for instance, in Connecticut, I think you use the example, I think they would give you a tax credit for the taxes that you paid in New York. So you'd figure out your Connecticut taxes and say, this is the total amount if I had to pay it all to Connecticut, but we'll give you a little some amount of credit for the taxes you paid in New York. So if the New York rate is higher, maybe you'd get a full credit or some percentage. Every state is different, so I don't know what Connecticut would do in this particular case, but a lot of states do provide a credit to taxes you pay to other state on that income that you're reporting in that state.
Representative Opal.
Thank you, Mr. Chairman, and thank you for taking my question. I want to go back to market-based sourcing, and I'm going to simplify this.
Please do.
Well, I'm going to try. Let's see if my simplification works. If I understood your explanation, it sounds like it is the difference between taxing where the work occurred as opposed to taxing where the result of that work is enjoyed.
Yeah, every state again defines it a little differently, but it's largely who received the benefit of that. And sometimes determining who receives the benefit is a complex issue.
Okay. Follow up, Mr. Chair. I'm trying to understand. You said New Hampshire adopted the market-based sourcing.
Yes.
It sounds to me like that would be detrimental to revenue potentially. In the example you cited, in your own firm, if you're doing the work under the old system, New Hampshire would have taxed you for whatever profit you made on that. In market-based sourcing, Massachusetts presumably would tax it, and New Hampshire wouldn't get the benefit. If that's correct, what was the justification?
Because the same CPA in Massachusetts doing work for somebody in New Hampshire now has to portion that income to New Hampshire. And so it was largely done to capture, I'm speculating a little, but my opinion is that it was largely done to capture revenue for out-of-state companies that had customers here in New Hampshire, but weren't really, because the work was being done out of the state, they weren't really paying a level of taxation in New Hampshire. And I know I have I've had discussions with the DRA and Commissioner Stepp, and I've asked them, have they been able to evaluate that? And I think the answer was no, they didn't have enough data yet to determine both single sales and market-based sourcing, what the ramifications are on the revenue. But I don't anticipate that there has been a huge swing one way or the other by moving to those.
One last thing. How long ago was that change made? And I'm hoping DRA is actually trying to capture it.
Both were fairly recent. Single sales was for periods after December 31st, 22, so only a couple of years ago. And market-based sourcing, I think, was the year before. And I have the tax periods after December 31st, 21, we moved to market-based sourcing.
Thank you.
Any other questions? Okay, seeing none, thank you very much.
Thank you, Chairman,
And,
members of the commission.
thank you to all the CPAs that came today, and we appreciate it.
You're welcome.
Okay, that pretty much concludes the agenda I had prepared for today. Our next meeting, as I mentioned earlier, would be Monday, January 13th. And we have a meeting Tuesday the 14th as well, both starting at 9 o'clock. We'll hear from state agencies on the 13th and some outside agencies on the 14th. What we really want to start understanding is what is where are revenues, what's the direction of revenues heading? Because as I said earlier, we'll be taxed with coming up with the revenue estimates that pretty much determine what the state can pay or use can use over the next 2 years. So it's a very important job that this committee has, and that'll be the start next week. Any questions before we adjourn? All right. Thank you, everyone. We'll see you later.